You've seen the headlines, you know the story. The floodgates, we were told, were finally open. 7, not 1, not 2, but 7 spot XRP exchange-traded funds are now live, trading on the biggest exchanges in the world, from the NASDAQ to the NYSE. We're talking about Franklin Templeton, the legacy giant, Bitwise, the crypto-native powerhouse, 21 Shares, Grayscale, Canary Capital, the list goes on. The very infrastructure the XRP community has spent years begging for is finally here. So let me ask you a simple question. Why is the price still going nowhere? Why, after the SEC lawsuit ended and regulators gave XRP the green light as a digital commodity, is the price still stuck in the mud? This isn't a mistake, and it isn't bad luck. It's a deliberate shadow game, and you're being played. But what the institutions don't want you to realize is that their game of price suppression is the single biggest signal that the real move, the one we've all been waiting for, is about to begin. And I'm going to show you exactly how they're doing it, who the players are, and how you can position yourself before they decide to flip the switch. Let's start with the frustrating truth, the core contradiction that every XRP holder is feeling right now. On one hand, we've had a string of institutional green lights that should have sent the price to the moon. The end of the SEC case in May 2025 was supposed to be the main event, the catalyst that changed everything. And for a minute, it looked like it was. The price shot up to a cycle high of $3.65 that July. So why does that feel like a distant memory? Then came the ETFs. Between September and December of 2025, the dam just broke. Rex Osprey launched first, followed by a tidal wave of the most respected names in finance. Franklin Templeton with its XRPZ fund, Bitwise with XRP, 21 Shares with TOXR, Canary Capital with XRPC, and more. These aren't some obscure products on shady exchanges. They are physically backed, fully regulated funds trading on the NASDAQ and the New York Stock Exchange, holding real XRP in cold storage. The demand was immediate and overwhelming. On the very first day of trading, these new ETFs raked in a collective $164 million. They then went on an incredible 35-day streak without a single net outflow, a feat that not even the Bitcoin or Ethereum ETFs pulled off in their early days. Does that sound like a failing product to you? By the end of 2025, total inflows had blown past $1.18 billion, climbing to $1.44 billion by January 2026. It was like watching a rocket ship take off while its launch pad crumbled beneath it. And yet, what happened to the price? Absolute devastation. As of March 2026, XRP is hovering around a measly $1.40. That's not a dip. That is a staggering 61% collapse from its peak just last July. And the price is down over 40% in 2026 alone, bleeding out through 5 straight red months that have crushed morale and created a crisis of faith for everyday investors. This is the great disconnect. On one side, you have every bullish signal you could ever ask for: regulatory clarity, a commodity classification, and a full suite of ETFs from Wall Street's heaviest hitters. On the other, you have a price chart that looks like an absolute train wreck. It's enough to make you question everything, to make you think you were wrong. And that is exactly what they want. Because this isn't a story of failure, it's a story of accumulation. This isn't a market crash. It's a calculated, coordinated takedown designed for one reason: to shake you out before the real game starts. So what's really going on here? If the demand is real and the plumbing is built, why is the price falling apart? The answer is as simple as it is brutal. This isn't market failure, it's market manipulation. This is the shadow game in action. Put yourself in the shoes of a multi-trillion-dollar asset manager. You've done the research and decided XRP is a critical piece of the future financial system. You see its role in cross-border payments, tokenized assets, and a new global economy. But you have one big problem. You need to buy billions of it. If you just wade into the market and start clicking buy, the price will explode before you've built even a fraction of your position. You'd be front-running yourself, paying retail prices for an institutional-sized bag. So what do? You don't play their game, you play your own. You suppress the price. This is what Wall Street does better than anyone. They spin a narrative of failure and weakness. while quietly soaking up every token they can at a massive discount. The price collapse we're seeing isn't a bearish sign. It's the loudest bullish signal you could ask for. It's the proof of an ambush. Just look at the on-chain data. While the price has been tanking, something fascinating has been happening behind the scenes. The amount of XRP available on exchanges has plummeted, dropping from around 4 billion to just 2.6 billion during 2025, the lowest it's been since 2018. Where did it all go? It didn't just disappear. It was moved off exchanges into dark pools, into over-the-counter OTC block trades, and into the cold storage vaults of the same institutions launching these ETFs. They are creating an artificial supply shock, draining the market of tradable XRP so that when they finally take their foot off the brake, the move up will be that much more explosive. They need you, the retail holder, to sell. They're banking on your frustration. They read the social media posts, they see the panic, and they are happily taking the other side of that trade. Every time the price drops on what seems like no news and you feel that pit in your stomach, remember, a sophisticated trading desk on Wall Street is likely scooping up what terrified retail investors are dumping. They're pouring fuel on the fire of fear and doubt, all while their vaults fill up. This isn't an accident. It's a coordinated ambush to acquire a generational asset for pennies on the dollar. If this is landing differently than what you've been hearing elsewhere, hit that like button. It helps us reach the people who actually want to understand what's happening. Every good conspiracy needs hard evidence. So let's get out of theory and into the facts. Let's unmask the players and look at the public scoreboard they've left for us to find. The first and most jaw-dropping piece of evidence comes from a dry, boring SEC filing that changes the entire story. It reveals the single largest institutional holder of XRP ETFs in the United States. And it's not a crypto fund. It's not some tech billionaire. It's Goldman Sachs. According to regulatory filings, Goldman Sachs holds a staggering position of nearly $154 million across 4 different XRP ETFs. Let that sink in. That one position is larger than the holdings of the next 29 institutional holders combined. Of the roughly $211 million held by the top 30 institutions, Goldman makes up over 70% of it. But this is not a casual bet. This is a deliberate, high-conviction move from the most powerful investment bank on earth. While the media was screaming about XRP's price crash, the smartest money in the room was quietly building one of its biggest positions. They were literally buying your fear. Let that number sink in for a second, because here's what it actually means. This is where the game gets even more clever. While Goldman was loading the boat, where was the rest of the institutional money? It was almost nowhere to be seen. Analysts estimate that a shocking 84% of all the money in XRP ETFs is still held by retail investors. The institutional footprint is tiny. This is the decoy. They launched the ETFs to create the appearance of a fair, open market, let retail pile in, and then use price dumps and negative headlines to shake those same investors out. The institutions aren't buying from each other. They're accumulating the supply that frustrated retail holders are giving up. This brings us to the final piece of the puzzle, the ultimate trigger, the one player everyone is watching, BlackRock. BlackRock, the $10 trillion monster, has been suspiciously quiet during the XRP ETF race. But their absence isn't disinterest, it's strategy. And thanks to an insider, we know exactly what that strategy is. Stephen McClurg, the CEO of Canary Capital, one of the firms that launched an XRP ETF, publicly stated what BlackRock is waiting for. He revealed they have a specific trigger before they'll file for their own XRP ETF. That trigger is a combined $3 billion in assets under management, AUM, across all the existing XRP ETFs. There is a public scoreboard for BlackRock's entry. Right now, the total AUM is around the $1 billion mark. We are exactly 1/3 of the way to the BlackRock Trigger. This isn't a rumor, it's a quantifiable goal laid out by an industry CEO. BlackRock is just waiting for the market to prove there's enough demand. They're letting the other ETFs do the dirty work of soaking up the initial supply before they step in and legitimize the entire market overnight. Think about the genius of this plan. You let smaller players like Bitwise and Franklin Templeton go first. You watch them prove the demand is real. confirmed by that record-breaking 35-day inflow streak. You let your Wall Street peer, Goldman Sachs, signal to other institutions that it's safe to get in the water. You use market mechanics to crush the price, letting your future clients and your own trading desks load up at a massive discount. And you wait. You wait for the AUM to hit that magic $3 billion number, a sign that the accumulation phase is almost over. And then you make your move. This isn't just a theory. It's a visible, trackable strategy. And if you want to stay ahead of the institutions and watch this $3 billion scoreboard with us, make sure you subscribe and hit that notification bell. We're tracking this shadow game every single day, and you don't want to miss the update when that number starts ticking up. Everything I've just shown you is the setup, the players, the board, the strategy. What I'm about to show you is the trigger. So what happens next? What's the end game here? This whole period of suppression and accumulation is like coiling a massive spring. With every dollar the institutions buy, with every token that's pulled into cold storage, the pressure builds. The available supply is being squeezed tighter and tighter. The game will end when two things happen. The total AUM of the existing ETFs gets close to that $3 billion trigger, and BlackRock's spot XRP ETF filing subsequently hits the SEC's desk. The moment that filing is public, the game is over. The suppression will stop. And when it does, the price won't just slowly recover. It will snap back. The coiled spring will be released. All that artificial weight that has held XRP down will vanish, and the price will be forced to catch up to the new reality of its supply and demand. A reality where trillions of dollars in institutional capital are fighting over a tiny, reduced float. We aren't talking about a 10% or 20% pump. We're talking about a violent, explosive repricing event. The months of frustration will be replaced by the shock of a market realizing it's been completely blindsided. And there are other things that could light the fuse even sooner. The passage of the Clarity Act in Washington, for example, could provide the final regulatory seal of approval that unleashes a wave of institutional money, with some analysts predicting it could trigger $4 to $8 billion in new inflows by itself. A move like that would blow right past the BlackRock trigger and likely force the price back towards its old highs of $3.65 and far beyond. The narrative you're being sold, that XRP is a failure, that the ETFs were a dud, that the smart money isn't interested, is a lie. It's one of the most sophisticated psychological operations happening in the crypto market today. They are counting on your despair. They are waiting for you to get fed up and sell your position right before they make their final move. But now you know the game, you know the players, you know the strategy, and you know the scoreboard to watch. You're no longer just a piece in their game, you're an observer who understands the rules. They think you're going to sell, they're counting on it. But now you see the shadow game for what it really is. The only question left is, are you ready to play? Make sure you subscribe so you don't miss a single move. And if you want to understand why Goldman Sachs is already positioned, we broke that down in detail right here. That one will change how you read the next 6 months. Disclaimer, remember, this is not financial advice. This is an analysis based on publicly available data and observed institutional patterns. Always do your own extensive research before making any investment decisions.